Hey guys, August the 10th. What a strange day. Let's actually get into it a bit here because it almost doesn't matter what I have to say on days when the whole screen is green. This is what I'm seeing. You can see that the only area that there's any kind of weakness is healthcare, strangely enough. And in fairness, healthcare is a bit of a mixed bag, but largely speaking, most of them manage the quarter just fine, and they still have a ton of money, and you're still seeing a lot of M&A activity. So this almost worries me a bit. It feels more like a relief rally, especially with Amazon. Let me tell you something. As much as everybody wants to give love to CPI, which I'm going to mostly, that's what we're going to go through is mostly CPI today. There's nothing in that CPI report to help Amazon. And I'm going to go through it fairly clearly. Oh, I always have to make sure to say past performance, not indicative of future returns. Energy is actually holding up well, even though that was the portion of CPI that came in the weakest. And quite frankly, we've talked about this already a lot. So there's really no surprises to me. The only surprise to me is the economists thought the CPI was going to come in higher. In fairness, it's not like CPI came in fantastic. It just came in relative fantastic relative to the street. If you look at the indices, you're seeing a huge rally, especially strangely enough in the NASDAQ, leading everything. Crude actually rallied a bit too, because in fairness, I think folks are thinking that the economy is a little better than it should be. This is not the number to tell you that the economy is better than it should be. So it's a little strange to me. But you know what? Crude at 90 is stupid, to be fair, because that is not what's going on in the world. And we've been pretty clear about that throughout. Now let's get into what actually happened with CPI. And then the only other thing I really have, that's really the majority of what I'm going to talk about today. I do want to remind you that the only other economic news out, we have PPI coming in tomorrow. That actually, to me, is probably a little bit more interesting because, the company's side, even though everybody's all about the consumer, I do kind of want to see what PPI, what the producers do, especially in light of what's going on in Europe, because one thing's for sure, it's going to cost more to make electricity in Europe versus the United States. And, it was interesting because even in the US, about 30% of all nat gas is used for the production of energy from a utilities perspective. And then another 30 goes into industrial. I don't know what the European mix is, given that they don't have nearly as many nuclear power plants as we do. And they sure as heck, in theory, we're coming off of coal. So that's all I have to say there. I think this rally, as much as I'm thankful for it and happy for it, there are some oddities. Okay, let's get into CPI. Oh, one other thing I would just mention, I'm probably closer to 250 now since I last posted this, so I'll post again soon, but I'm still seeing these ratios remain approximately correct. And it's interesting because it is very much so a mixed bag. In every single industry, there are some companies that are clearly taking share, clearly crushing it. And then there are some companies that are absolutely not. And then there are even some companies that are like, screw it, even if we don't make money, we want to take share. So what's going on in corporate America is very fascinating. And you cannot just continue to buy these indices like that's the best move. You really should be trying to do the work and finding companies that you think are great and going to really survive this next year. Not just survive, but thrive. Okay, let's take a look at what actually happened with CPI. The CPI top line number came in at 8.5. The street was expecting something like 8.7. Okay, here is the number that we have talked about. Oh, I should have highlighted it. Let me try to increase the size of this. Food. Okay, food is an issue. This is why I am so bullish. Wheat, corn, and soy. I like all three. I like using the options market to get it for cheaper than what these tracking indices are doing, because you can, oddly enough, if you go out to January, which is where I'd prefer you to do it anyway, you can use the options market, usually like the $5 and $10 ones if you want, and you can recreate the ETF for cheaper than what it's currently trading at. Do I want to do it today? Mixed feelings about it because the market, a 1% upside, like we don't know what's going to happen tomorrow or the next day. We are exiting earnings season though, and it does look like this market is going to be a trader's market until the September timeframe. But in general, you want to be long grain if you can be long grain, however you want to do it. And you don't necessarily want to do it by being long companies that sell through grain. So you definitely, on the staples, you got to watch it where you pick your spots. Archer Daniel Midland is kind of a mixed bag. You could actually do really well there, but they also will have, they're not a pure play, is all I'm saying. And wheat, soy, and corn, it's a mistake to be anything but long those right now. And if you look at the indices, they've all three given back a lot, because this is what we're seeing in food. And this is happening, let me be crystal clear, this is happening because the producers of the food, the companies that package it up and then resell it to us for the most part, they can no longer eat any more cost. So they're just passing it straight through to the grocery store and refusing to take additional margin cuts that, because they have been experiencing margin compression through the quarter. This quarter, it was like no mas. So I do not anticipate anything but now for you to start to see pass-throughs of all of the grains and grain related material stuff that comes out of it. So remember, you still got to feed animals grain. That's what you feed them. You know what I'm saying? So all of this I can see being an issue. I would just continue. And we even saw that with Tyson, by the way. And also because you have such a strong dollar, it's a really funky scenario we have going on globally. As much as people want to say, well, we have a strong dollar, so other countries' grain is going to be more exciting to us. Au contraire, mon frere, take a look at what's going on in Latin America and tell me that you think that the currency differential across all would actually still make sense for Europe. Just be long grain if you can. I don't know another way to say it. I feel like I've beleaguered it at this point. Take a look at energy. We've talked about how weak energy has been, even though there is a shortage still going on. This makes no sense. Same thing with grain. And you can kind of see that it is fuel oil down 11%. By the way, the other place that's showing some weakness is airline fares down 9%. Realize that this is just a straight pass through. I mean, fuel oil, jet fuel is a huge component of that. So they're just passing it straight on through for the fourth quarter. And I literally said that yesterday. If you work at an airline and you were not hedging out your jet fuel for the last part of the year, then God bless you. And you must have a very, very different view than literally every energy company out there. So that is that. And then motor fuel gasoline, this is partially coming from the fact that we are now subsidizing a lot, removing some of the taxation on gas, as well as just you've seen kind of what gas has been doing, gas has been doing from the commodity side as well. And that's just getting passed through. And then piped gas, you can see on the utility side, it's really interesting because the utilities are not, it's a mixed bag, and it has to do with the fact that we do still have regulated utilities for the most part. Some were structured perfectly going into this. They got their rates approved at just the right time. Everything is lovely. And then some are not. That's why you're seeing utilities, electricity up 1.9, despite the fact that all of this has happened. And you're seeing piped gas, which this isn't really when you're using nat gas from it's really the winter, if you think about what it is you're using that gas for. So that's something to note. That's what's happening for us. Again, what we're seeing and what Europe's seeing, not the same, because right now, whereas we're benefiting from this lower price, all of the refiners, all of the different companies are negotiating in Europe what the price of these things will be for the winter months going forward. So it's a very different picture. I think that's why you still see my favorite name within coal, Consol Energy, rallying aggressively, even though you're getting some response, given what we're seeing from FinViz across the oil sector. It's not nearly as aggressive as like up 3 from Amazon. The other reason that I kind of want to highlight that being long Amazon, this was not a good CPI for Amazon, because one of the areas for which Amazon really does well, and you have to think about what it is that Amazon takes into its own personal inventory and sells, and that's like all of the Echo products as well as other things that they're doing, and that is electronics. And consumer electronics has been weak. Last month, we saw a little bit of a recovery, but this is what we saw this month, down 14 for televisions, video equipment down 4, audio is up a little bit, but recorded, it's just not, this is not the kind of report where I get super excited about Amazon. So just know that consumer electronics showed up very weak. The other area that showed up weak, I didn't have time to cut it through, but I think you can see it here is here, let me just bring it down so you can see it. I'll use this little red box to try to help illustrate. Apparel, right? So this actually is kind of what we're seeing as well across some of the different, like Ralph Lauren reported yesterday. Some of the apparel companies are also in a little bit of a conundrum because they are global companies and they've seen the euro take a nosedive, but they're, they bought the clothing for what they bought the clothing for as relates to producing it, et cetera, a quarter ago. And then reselling it through. So that's a fairly significant problem for international apparel companies, which is a little different from retailers, but realize that some of the retailers that do have exposure to Europe, like Walgreens, Boots, et cetera, they're going to all be expressing a little bit of angst over the fact that Europe is just not dollar for dollar making them the same amount of money. And with that, I'm going to go ahead and hit the pause button and take questions. We'll keep this kind of on the shorter side. We do have Disney reporting tonight, so that could be really, really special. The vol on Disney is crazy. So first thing in the morning, going to take a look at how that earnings report goes tonight, and then probably sell some vol on it if I can, without getting cremated, because 100 vol on Disney makes no sense.
Hi, me. Okay, brilliant as usual. I've heard that Jack Ma's sold all of his Baba.
Did he really? Oh my gosh. Yeah. Oh no, this, it's always hard to interpret Chinese news, especially of this nature, but I don't even know. I'm not even going to comment. I'm too scared. There's so much weird stuff going on in China right now. It's really its own like I really have to, you need a China specialist on this. I'm not even going to try, but that's good to know. And that probably indicates why it's been so weak.
Okay.
Oh, you mentioned the VIX to me earlier, and I think that you're totally right. Let's actually take a look at that. Because this is a low point for the VIX. It's under 20. It hasn't been under 20 for a while. The key thing and the tough thing, I almost want to wait till the end of the week just because, and do it on a Friday. Okay. So next in 2 weeks, we have options expiration, I think, again, for the monthlies. And all of those companies have been trading very strangely. For example, Albemarle, which I probably should take a little victory lap on, but when everything is up so aggressively, it's always a little bit like kind of lame to take a victory lap. But Albemarle, which is my favorite lithium play, because it is the only large cap lithium play within the US. And they do have exposure to China, which is part of the reason why people keep shorting them. But I think that's really stupid because everybody across the entire globe is going to try to move more and more towards battery storage for the various use cases, IoT, automobiles, utilities companies, better power grid, There's so much that's going on with lithium. It's crazy. And we really don't produce enough of it. Anyways, the point is that, when we look at the VIX right this minute, and we look at a company like Albemarle, because it has monthly options expiration, sometimes it trades really quirky until it can't trade really quirky anymore, and we're on the next options expiration date. So just realize that with the VIX, it's very hard to know which direction. I mean, it's just scary. So I might give it another half a beat and then live to regret it. But in fairness, depending on where exactly you're getting your strikes, it's not the worst thing to take some VIX exposure. I totally agree with you on that. If you're going to use the UVXY, just realize that thing is very strange in the way that it trades when you have big directional movements. This has to do with geometric returns. One day I'll do a video on explaining why that is. So if you're going to, of the instruments, use the VIX options on that. Do not use the UVXY when things are going the weird way that they're going right this minute. And you can always remember, one thing that you can always do is option spreads on the VIX, which allows you to recreate the VIX at very specific prices. I'll have to do like a tutorial on that. But essentially, if you short the longer end, if you're going farther back and you want to kind of reduce it, you can still do like a 5 or 10 point spread because at different spots. And that way you get a lower price on VIX options. And if VIX continues to come in, then you've kind of hedged out some of that weird short-term stuff going on.
Use VIX as a hedge.
Yeah, no, but you can do it. You can do it with a call spread instead of doing it as just like buying calls on it.
Yeah. Okay. The next CPI, gasoline has gone down like 56 days in a row.
Yeah.
So the next CPI should be better. I'm thinking.
Yeah, and we talked about the fact that this CPI number would come. It just depends. The one thing, look, at this point, yes, 100%. At minimum, it'll be flat because oil has more or less been kind of neutral. Gas has been kind of neutral. And also September is a weaker month for both of those things because it's the fall. And, we've been having these crazy heat waves. So it'll still be showing August. So it's kind of difficult. So August is tough because you're going to get probably a little bit of an uptick on the utility side. Nat gas and oil usage in other ways will probably be down. Food will be up for sure. And then it'll be a question mark how much people spent on all the other stuff. So it should still directionally be much lighter than what we've seen. September also should look much better on the inflation numbers. And that's where I think then PPI starts to become important because a lot of companies have reported that they're kind of calming it down, so to speak, because they're worried about global demand. And it's the degree to which did we accidentally talk ourselves into a recession or not? That's a real question that should be more thoughtfully considered than just thrown out there sometimes, and then no one talks about it further. Yeah, that's how I'm thinking about it.
Great, thank you.
Cool. All right. Well, everybody enjoy this bull rally. Hopefully you guys weren't overhedged or were at least participating in it. And I'll see you guys tomorrow. Bye.